As Matthew McConaughey so astutely says, does that mean data is the new gold? Yeah, it does. And as I said in a previous video, this gives us the opportunity to actually beat Wall Street at their game because they're so big and it takes so long for them to take a position in a new stock that they recognize through the data that they gather. It takes anywhere from 6 months to 2 years to build a position. Well, if we have access to the same data and we can know how to interpret it and work as a team to sort through it, well, we can beat them at their game. We can recognize that, as I did the story of SMCI, the video I just did, we can recognize that this is a stock that is going to be in building the computers that are going to go into the data centers that are going to make artificial intelligence available. We just need to have access to the data. And by that, I mean, what are the projected earnings per share and what are the revenues and what are they saying on their earnings calls and what are they putting out on their press releases? If we can bring all that together ourselves, well, then we can beat them at their game because it doesn't take us 2 years to build a position in SMCI so that I can benefit from the 1 year where it goes up 750%. That's how it was all structured. So if you watch that video, you'll see that. So what I've been working on for about the last 6 months, it started with a spreadsheet of the history of the Bus 13 portfolio and showing that they have a consistency of producing over a 35% per year over an extended period of time, anything over 5 years. So with that in mind, I said, okay, now I need to do beyond that and say, what is the signal that tells me that the stock's going to go up or down? And what is the signal that tells me how much it's going to go up and down? And can I learn that signal by studying past data? And so that's what I've built. And I want to show you in this video how I built it and how it tells me that I've got 5 stocks, and I'm not through the whole portfolio yet, that are going to give me a rate of return between now and the end of 2025 in excess of 100%. Some of them all the way up to 700%, basically just duplicating what Supermicro did. And so with that in mind, I can predict the future. Now, what my next challenge is, I can do it relatively easily, not easily, it's a lot of work, for 37 stocks, but there's 6,700 of them. So in order to do that, I need to hire people. I figure I need to hire about 7 people for something in excess of $100,000 a year to do the analysis, to work with me to better my analytical ability, to bring in 9-day moving averages, 200-day moving averages, relative strength index, the MACD, so that I not only know what the stock price is going to do, but when it's going to go down and how far down, and when should I buy in and when should I get out. It's just like you've got to know, if you watch the video I did on SMCI, that was orchestrated, that they basically created the 750% increase in SMCI, and then when they knew where the top was, and then they took their profits, left their initial investment in it, and now as it's going down, they know where it's going to end, just like I know where it's going to end, and where they'll buy back in and take it the next step up. This is all data-driven. Yeah, interest rates influence it somewhat, but that's a short-term reaction. So let me take you to my computer, and let me share with you what I've done so far. I'm not done. I've got probably, just in building the chart I'm going to show you, about probably 72 hours of work. And I'm only 2/3 of the way through it. But I want to show you how it works, and I want to give you a glimpse at the 5 stocks I've found so far that will give me in excess of 100% return between now and the end of 2025. And then I can show you, I'll show you on the spreadsheet, I've done it for 26 as well. So if you get all the gain in 25 and it isn't going to produce in 26, then you sell it, okay? This is what Wall Street does. Is this new? No. No. Wall Street's been doing it to you for probably the last 10 years. They've hired the people. What is it I told you the other day that Goldman Sachs Goldman Sachs has 43,600 people, but they're managing $2 trillion. You don't have $2 trillion in your portfolio, do you? Let me take you to my computer. This is what I've been working on for the last month and a half, and I've got it now in a position where I can present it and share it with you at some level. This actually, I would say, this is the culmination of 50 years of work. I believe that with data, as I've said earlier, I can predict the price of a stock. So I'm going to walk you through on a couple of that I have done. I've got all 37 stocks in here, but I haven't entered the data for all of them. But I want to share two of them with you. This one up here is Apple. I'm hiding the ticker, and I'll do that because I've got a lot invested in this, and I'm not going to give it away. So here's the premise. I believe that stock prices are determined by the profitability, which is represented in earnings per share of any given company. So what I have done is gone back to 2009, and I'm showing you Apple's earnings per share, 32, 54, 91. Up here, I'm showing you the percentage change. So from 54 to 91 was a 65% change. From 158 to 142 was a 10% drop, okay? And then I come across here and I give you an average growth of their price or their earnings per share. So from column L through AA, which will take you to 2024, their average is 26%. The average growth of earnings per share is 26%. Then I do the same thing for their stock price. This year it went up 67, down 52, and again here in 2015 it was down 5. So then I come across and I say, okay, the average was 35%. So what that is saying, for every a percentage point that earnings go up, the price goes up 37%, and that's represented there, okay? So for every percent that the earnings go up, the price will go up 37%. So what I've done is said, okay, if the current price is 167.62 and their projected earnings in 2025 is up 9%, then they're, based on history, the price of their stock will go up 12% because 137% of 9 is 12. So that's what I'm projecting then, that the price of Apple will be in the end of 2025. Now they say that their stock earnings will go up 8% or 8.7% in 26. So that's another 12% gain. So I'm saying the price of Apple at the end of 2026, based on the data of the past, 14 years, and their projections of their earnings, the stock will increase by 25.6% over the full year. Then what I do is say, okay, with Apple, I use an arbitrary portfolio, $500,000. You just saw the numbers change. That's because this is tied to the stock market, and every 10 minutes, it updates the price. So what I've done is I have a $500,000 portfolio, and I say based on a 25% return in 2 years, I don't want Apple to be more than 2% of my portfolio. Okay, so that's what I do. And I go through and I do that for every stock that is in the portfolio. And you can see you get some very different earnings or growth. I have basically said I'm really not interested in any stock in 2025 that doesn't give me at least a 33% return. So you can see here, this stock has, rather than a 127, it has a 227 multiple. So it's $11.87 price will go to 15.80, which will give me a 33% gain. And then it's based on its projected growth in 2026 of 261% in their earnings. It's going to give me a 594% return in 2026. For the 2 years, 824. And so I want 5% of my portfolio allocated to that stock. And I do that on every stock. And as you can see, here's one that'll give me 57%. And then it's going to give me 28% for a total of 50%. Now, here's a stock that and I got to recognize it's got a very short history. But it looks like it's going to give me a 227% multiple. So when it tells me that its earnings are going to go up from a negative 26 to a 58 to a 69, that's going to give me a 721% return in 2025 and a 43% return in 2026 for a total return of 1,000%. Again, because of its risk level, I only want 2%. So that's what I've done and gone through here. Now I want to show you another one with its ticker symbol revealed. This is Nvidia. And as it goes back to 2009, you can see here you have the earnings go from 24 to 23 to 19 to 28 to 27. You can read the numbers. And then when you get into 2024, this is when Nvidia is really growing. And here, the earnings in 22 went down from 385 to 174, but then they jumped to 1296 or 645%. And that's why you got the big jump in price. Here, you see it in 2023 because the market was anticipating that growth in earnings. Okay, Jensen had shared that, hey, we're about to explode, and so even though earnings that year had dropped from 385 to 174, the market knew about this. And so that's why the price went up in 95, but the earnings didn't show up until 24. So that's where we are now. Now, Jensen has basically, and the analysts have said that next year in 25, it's going to be a 92%, followed by a 21% increase in earnings. Now, with that, again, I do an average. This is the average growth of earnings. This is the average growth of stock. So in Nvidia's case, they get a bump of 117%. So on this 92% that they're projecting for 2025, we're going to interpret that as a 107% gain. So I'm predicting in 2025 that Nvidia's price will go from currently today at 865, it will go to 1795. Then again, as we go to the next year, his earnings are only going up 21%. Now, what you got to know is when that changes, when he does an earnings report, this number will change as well, which will change this number, which I can then look at and say, okay, he's projected that it's not going to be a 21% gain in earnings. It's going to be a 51% gain, and these numbers will change and advise me to either up my ante on Nvidia or cut it back. But this is all based on fact. And as you can see, I've done it for about 66% of the portfolio. And as you can see, I've gone through and said, here's a stock that's going to give me 103%. 70% of it's going to come in 25, and 31% of it's going to come in 26. So I'll allocate my portfolio to 4% of my portfolio in this. But if we look up here, here's a stock that's actually projecting based on the numbers. Now, it doesn't have the history that Nvidia and Apple does, that it's actually going to give me a 5% loss. I'm only going to get a 1% gain in 25 and a -6 in 26. So actually, I'll do it right now. I don't want to own any of that. Okay, so I can do that on my computer. And as I say, it updates on a daily basis. And over here, then I can manage my portfolio based on what how much of my $500,000 I want allocated to each of these stocks. So that's how this works. My dream is, and I'll be very honest with you, my dream is that you will say, I've got to have that. And you will join our tribe, and you'll get on the bus for $60 a month, and that's how you'll gain access to this. But eventually, I want to hire people so that I can put this into an app, or I can put this into a piece of software, and you can have it on your computer so that you can go in and say, yeah, but I'm interested in XYZ. And you'll have a box that you'll put XYZ in, and it'll populate all of this for you, as well as the other elements of my cheat sheet and the other elements of our swing trading platform. So that what I also want to inject in this is that how is this being affected by the news of the day? Today, it's the consumer price index. And I want, because you can not only predict based on numbers, you can predict based on sentiment. And you can interject that because that's just another form of data. And we now have the capability to go and find that data. And that's what I've done here. I've just gone out and found this data and then injected it into this very complicated platform so that I have an idea as to where I want to invest my money and where my biggest gains and my biggest losses might be. And again, the beauty of it is it changes as the atmosphere changes. As Apple will have its earnings call, I believe in, I'm not sure, within a number of weeks, and they come out and say, we're raising our earnings estimate in 2025 from $7.16 to $10.16, or they say we're lowering it to $5.16, that'll change. And that'll change everything here. And I will be able to come into it. And again, what I want to do is have you have it on your computer, and you not only decide I want Apple, but I want XYZ. So that's my dream. As again, I said, I can't do that by myself. Number one, I'm not an engineer, but I can hire an engineer to create this. I have the dream. I have the concept. I connect the dots. And then I want to hire people to come build beyond this. I want to build into not only earnings per share, but revenue. I want another line in there and see how they interrelate so that we can, with 80% accuracy, predict that number and that number on any stock we want. And all we have to do is put in a ticker symbol. That is possible. I need your help to do it. I need to hire about 7 people. And they aren't going to be cheap. These people are going to want somewhere above $100,000 a year to do this kind of work. Or I'll have to go out and hire them on a one-time basis. But if I want to take this to a piece of software that you can put on your computer, and you just come back and forth to Best of Us Investors, and I share what I'm doing with my software, and you can say, okay, I'll inject that into mine. And we as a team, as a tribe, will beat Wall Street at their position. I have tribe members now who are coming to say, teach me how to do this, and I'll input data for you. I'll read the earnings reports. Did you listen to AEHR's earnings call this morning? I did. I know what they're doing. I know where that stock's going. And it's going to be a major part of my portfolio. It's in here. Now, I'll let you guess. It's on the screen right now. You guess which one of those is AEHR. Okay, that's what I have to offer. Let's talk a little bit more. Okay, that's how I'm spending my time lately. And I must admit, I'm a dreamer. And I'm very optimistic, and I believe I can do just about anything I set my mind out to do if I put my effort towards it, if I gather people around me that can help me and help me take my dream to a reality. Kathy Woods has coined the phrase that disruption is where you will find growth in the stock market. That's what this is. That's what I believe I want to do. I want to disrupt the brokerage system, much as Robin Hood did, and built an empire based on changing the way things are done. It's no longer needed that they have to have the advantage, much like Las Vegas does at the crap tables, to beat us out of our money and smile about it. No, I believe we are at the prefaces of where we can now take control of the stock market if we come together. If we stubbornly stand on the sidelines and say, you can't do that. Well, that's what they said to Henry Ford too, and that didn't work out so well. So I'm offering you an opportunity to step into the ground floor. I don't know where it's going to go because, quite honestly, every day presents me a new opportunity, a new idea, a new way to say, let's take this to the next step. Because what I know and what I've learned over the last 5 years, where I started with no subscribers and I now have 180,000, there's an interest in this. There's a desire to get better at what we've all been trying to do for the last 100 years, and we've been getting our pants beaten off of us. It's now time to turn the table. They're a behemoth. They're the Goliath. We're the David. We've got the slingshot now. All we've got to do is make the rock hard enough to beat them at their game. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I wish I knew all this. I wish I had somebody like me when I was 25 years old who said, you can do this. Somebody's going to do it. I'm going to see to it that it's me, and I want you to be a part of it as well. Get on the bus, sign up for our Platinum group, because it's only going to get more exciting as we go. And help me build a company, and maybe you can become a part of it. Let's talk.